Hello everyone, welcome back to the channel. If you're new, welcome, and if you are a returning investie bestie, thank y'all so much for coming back. I do appreciate it. My name is Shalise. I'm a mama, a wife, a worker bee. I am just a normal investor like you. I'm in the trenches buying and holding into good ETFs and into good stocks that my husband and I love. I am not a financial advisor. I do share the accounts. I mean, you see it right up on your screen. And also beware of scammers, spammers, fake pages. If it sounds too good to be true, it is always confirmed. Okay, guys, I'm only active on YouTube and Instagram. So by the time you see this, this is under 50, but this is well over 50, because of the deposits that will be coming out of the next paycheck. But again, I like to make these types of videos to show you guys that when you invest into good companies, long-term growth does happen. Now, this Robinhood portfolio is built for dividends. Not everybody is a dividend investor, and that's perfectly fine. That's your prerogative because it is your portfolio. This money is ours, okay? It's in our portfolio, and we do like dividend investing. Now, keep in mind, with dividends, you don't get a lot of growth, but if you structure your portfolio correctly, you actually can have growth. And I'm going to share with you today 5 great dividend stocks and funds that we own in this particular portfolio that is up by quite a bit. There's some in this, there's one that I'm going to show you today that's up over 78%. All I do is buy and hold. If the company changes, if the fund changes, I will sell it and put that money in another security. Because again, this is about business. This is about understanding the fundamentals of a company. And if it changes, if your desire towards it change, if something happens on the management level that you don't agree with, you can take the money out and put it somewhere else. You don't have to hold something because a content creator says it or because someone on CNBC or Fox Business said it. You can buy or sell a security based off of what you believe from your research, etc. Okay. So the first one I wanted to share, we have several in here. It's a long list, but I'm just going to make this video short and sweet, is VYM. That's the ticker symbol for the Vanguard High Dividend Yield ETF. So this is a Vanguard based fund. So you can buy other brokers based funds on other platforms. So you can buy a Vanguard fund on Robinhood. You can buy a Vanguard based fund on Cash App. Okay. Now it doesn't work like that with all of them, but with most of them. So like SCHD, that's a Schwab based, or created ETF. You can buy SCHD on Fidelity. You can buy SCHD on Robinhood. Okay. So this Vanguard High Dividend Yield, if I come to the past, let's just say 3 months, it's up almost 8%. If I come to the past year to date, it's up almost 15%. And this is a pretty solid, Vanguard High Dividend Yield. So this is for growth as well as getting a dividend. So remember, if you are trying to find good dividend growth ETFs, DGRO is another really, really great one that we actually own. But you can see right here that our market value is $2,552.55. Our average cost is $115.20. So look, it's at $127.39. Our average cost is $115. So you can see right here, our total return is $244.35 or 10.59%. So I am buying an ETF, a fund that is usually safer, more conservative, but is still growing as well as paying us a dividend. So I am not complaining at all. We currently have 20 shares, so our short-term goal is 25. And then once we receive 25 shares, we will have our goal be adjusted to 50. And I track all of this in a spreadsheet and in a dividend book that I created. I am working for an updated one for 2025, but the 2024 one is still pretty good as well. You can get your books and trackers down below. Again, I did create them, and it's something that I use to document our journey. Okay. So the next one that I wanted to pull up is ET, and that is Energy Transfer. Now, I really do like this company. We pretty much hit our share size goal with this. But again, it's amazing how even when you hit your share size goal and you stop investing in it, you still have your shares, but you're kind of moving on to something else. When you're in good companies, it still grows. So if I come down to year to date, look at it. It's up 18% year to date. Again, I'm not telling you what to buy. I'm just sharing with you what's been working for my husband and myself. If I come down, you can see our market value is $2,206.48. But look at our total return, $462.29, or 26.50%. Seriously, guys, where in the world am I going to get a 26.5% return on my money outside of the stock market? So again, it may not be the sexiest company, it may not be as popular, but when you find gems and you believe in it, you do your research, it doesn't matter if it has pullbacks, and you buy and hold, it works. I can't stress that enough. It works. And the dividend is also a sweet spot. To this, we currently have 135 shares, and our average cost is $12.85. So again, we've been really liking Energy Transfer. It's a great sector to be in my humble opinion. And so yeah, moving on to Main Street Capital. Now, you know how I feel about this company. If you've been with me for a while, I have been investing in Main Street for a few years. I've made several videos about it on my YouTube channel. But I really do like Main Street. They pay a dividend out every single month, and every quarter they pay a special dividend. So in the month of September, we will be receiving two, count it on my fingers, two dividends, okay, payouts. So I love this. We currently have, let me do year to date first. It's up 15.94%, about 16%, which is not bad. If I come down to market value, you can see it's about $6,338.59. But look at our return, $1,228.17, or about 24%. Again, where am I going to get that outside of the stock market? So when you invest smartly, when you invest wisely, and you are consistent, that is key here. Even like up here, you see like these little dips and all that. When they have the dips, those are great buying opportunities, because look, it just continues to rise. And even if it have a sharp dip, look at it. And it's not even at the all-time highs. You know what I mean? Like, what if it gets back to $52.25 per share? Then that means that our average return will be even higher. So again, you want to just buy and hold into good companies and good funds that you believe in. Our short-term goal for this is 150. So we did achieve 125 shares. The dividend helps with this. So turn your drip on. Okay, that is the dividend reinvestment. Okay, that means you have to tell the platform to automatically reinvest your dividend back into the position. That way you don't have to manually do it. Now, if you are at the point in your investing journey where you want to live on the dividend or cash it out, then you can turn the drip off, and that you can have that money go to your checking account. But until then, we just have the drip turned on. Next is Aflac. Okay, so we have not actively invested in Aflac for a little while now. But again, it's just a testament to when you like long-term companies are great. So look at this. Year to date, it is up 32.88%. Okay. Coming down to our details. So our value of our position is $3,367.18. The market is not open, so that's why you see no return listed here. It's not officially open. But like pre-market trading and all that is open. So the total return, look at this, 78.38%. Like, that is seriously mind blowing. 78%. Like, that is insane. But this is a great insurance company. I think next year we're going to focus on trying to get this to 50 shares. But like, our average cost is $61.49. So I honestly don't know if I want to, because it's at $109. Like, it's at, our average cost is 61. Like, it's crazy. It's almost double, you know, what we paid for, which is crazy. It's so important to remember when you are researching good companies and good funds, the growth is in the waiting. Like, you know, Warren Buffett said, you know, the stock market is just a tool that transfers money from the inpatient to the patient. Kind of quote. I know I may have butchered it a little bit, but that's in essence what he said. If you just are patient, long term, even if you're not actively investing in it, it does work. You can see year to date is up 32%, and our total return is a whopping 78.38%. Absolutely insane. And then the last one is Costco. So I really have been enjoying Costco. You can see that year to date, it is up 39.11%. I want to build this up. Now, this is expensive. It's $912. Down here to our metrics, you can see that our market value is $1,943. Our total return is 29.80. I'm going to just say 30%. Our return is so about $446.16. Our average cost is about $702. So we have 2.13 shares. Short-term goal is 5. Just slowly build it up. Just be consistent. I'm not in a rush to do this, just want to be consistent, but I can definitely see this hitting $1,000. So I really do like Costco. We're fans of the business. We are fans of the actual store. So, you know, this is one of those cases where I love, like, you know, buying and holding long term into this. So those are the 5 dividend stocks and funds that I wanted to share with you today, that if you are just looking into good companies, into good funds, you just buy and hold long term and you just be patient with it, it does work. I mean, all of these securities that I showed you today was up at least 15%. So, you know, it's just a testament to buy and hold and believe in it, do your research, and just let the money come to you. Let the money come to you. So let me know down below one dividend stock or dividend ETF that you are up, let's say, at least 10% in. So go into your portfolio and pull up the information. And if you want to share, just share with me one. Okay. So again, guys, thank you so much for watching. Make sure you smash the like button, hit the bell notification, leave me a comment. And until next time, you already know, I'll see you in the next one. Bye-bye.